We have two experts joining us on the show today. From the technical side, we have Dhwani Patel, founder of Inversify, who will be joining us. And on the fundamental side, and Rajesh Agarwal, head of research, AUM Capital, is joining us on the show. Good morning to both of you. Thanks so much for taking the time out. And Rajesh, going to start with you. Let's get in our first viewer query coming in. It's coming in from Mohit from Ludhiana. 200 shares of Star Health. Star Health is the stock that he's asking your recommendation on. He holds 200 shares of Star Health at a price of 590 rupees per share. Time horizon is 3 years. What should he do going ahead?
Good morning, Shreyanshi. Good morning, Sneh. Good morning, Dhoni. Coming to Star Health, it's a good company with in the medical insurance business, and they are doing very well with the number of clients increasing, the number of policies sold. AUM has been increasing. The only thing is there have been some problems on the margin side because of selling and administration expenses. But going forward, I think that would be taken care of because of the number of insurance base going up. So, since you are looking for a 3-year time horizon, I assume you are a long-term investor, and please carry on with your stock. But these kind of falls are just because of market condition, not because of any company problem. So, carry on with your stock.
All right, then that's a take coming in as far as Star Health is coming in. Hang in there, and that's the word coming in from Rajesh as well. Good morning, Rajesh, as well as Dhwani. This is Shreyanshi as well. I wanted to ask you about the second query that we have for the day, Dhwani, which is coming in from Bala, writing to us from Coimbatore about the 175 shares that he's holding on to of Cyient DLM. He wants to know if he can add for one more year in mind in terms of the time horizon. What do you think about this one then?
Everyone, I'm talking about Cyient over here. Particularly, the stock has not done much in terms of the mid of this year till now. We've been seeing it trading into a range, and on the lower side, the support level for this particular counter is at 16 over here at 1630 levels. We're talking about Cyient over here, or Cyient DLM.
Cyient DLM, Dhwani. So that's the one that I'm talking about. 175 shares of Cyient DLM.
Okay, all right. So Cyient DLM definitely here, similarly kind of a structure. We've not seen much happening in this counter as well. And on the weeklies, we are seeing that there's a narrow range formation coming in over here. Though the support level over here that the stock is adhering to is of the 200 DMA at 600 levels is where the support level lies for this particular counter. So I would suggest a hold on it. Any dip you're getting around 600 is a good price to average this one.
Okay, so that's the view coming in on Cyient DLM. Next query, Rajesh, for you, coming in from our viewer Vignesh from Bangalore. He's holding 300 shares of Coal India at a buy price of 386 rupees. He's asking if we should add more at the current price. Would now be a good price to accumulate more, or would it be a good buy for the next 1 year? So he's asking for a 1-year outlook. He already holds 300 shares at 386. Should he buy more at the current price?
Buy from our side. One of the largest coal miners across the world, having almost 80% of the coal reserves from India. Government's focus on reducing imports of coal is another positive for Coal India. The power's demand is going up like anything, and volumes are growing from that sector. So that's also a positive. And not to forget, the company gives around 6.5% dividend yield at this price. So somebody holding for a long-term horizon, at least the interest part is taken care of, and the fundamentals are very strong. We believe around 20-25% upside from the current market price is quite possible in the next 1 year.
That's a take as far as Coal India is concerned. But the next one that we have, Dhwani, is coming in from Padma, a senior citizen, writing to us about Bandhan Bank at around those 185 levels. Not mentioned the number of shares purchased, but what do you think about this one then?
In my suggestion, this counter has seen a downward trend since the very start of it. We are not seeing any upward move coming in this one. Though the supports at the lower level is where is 140, 150 levels is where we had seen the lowest of this counter, and a break of this will suggest further losses in this one. So in my suggestion, move out of Bandhan Bank, look up at other banking counters if you're looking at a long-term perspective.
Not a good choice for right now, at least for the present, Bandhan Bank. That's the view coming in from Dhwani. Rajesh, coming back to you, and seems like our Bangalore viewers are very active today because we have yet another query coming in from Bangalore today. Sridhar from Bangalore is writing to us. He's asking, is it better to buy ITC at current levels or to separately buy those ITC hotel shares? Would it now make sense to buy ITC only to get those ITC hotel shares? These are the two questions that he has asked. What's your view? Because tomorrow, the 1st of Jan, is also the effective date for this demerger of the ITC Limited business as well as ITC Hotels. So what's your view on this?
First, coming to ITC, the company is doing very well. I have been recommending on your channel from levels of 150 odd rupees. And fortunately, it's are doing very well. All the divisions, be it cigarette, be it FMCG, dairy, hotels, everything is doing well. Strong balance sheet, debt free, giving good dividend yield. So ITC is a buy from our side. Now coming to the question that whether one should buy ITC simply for getting hotels, I think that can be a good strategy because what we believe that hotel also has a very good value inherent into that, but the quantity is very small. One share against 10 shares of ITC. So unless you are planning to buy a large chunk of ITC, you won't get very big quantity of ITC hotels. But still, I would say even if you are buying for ITC, getting ITC hotels, it's a good strategy. One can buy ITC. For ITC hotels also, and I would recommend if ITC hotels lists around 50-60 odd rupees in after demerger, that can also be a good buy.
All right, so that's a take coming in as far as ITC is concerned. The next one that we have, in fact, is also coming in from Bangalore, Dhwani, and they've not mentioned their name, but HDFC Bank, 100 shares at a buy price of 1,500 rupees, sitting at a profit. So what do you think about this one?
Hold on to this one, though the stock has been seeing a certain resistance around 1880 levels, but then from the lower side, we have seen a bounce also coming in this counter, and the breakout also for this one happened a couple of weeks back, and from there we are sustaining above those levels as well. The breakout came at 1780 odd levels, and currently we are around the same level. So in fact, it's a buy opportunity for fresh longs as well, and from current positions also hold on to it. Stop loss that one needs to maintain on the lower side over here, given a horizon of short term is going to be of 1730.
1730 is the level to watch out for on the underside. Thanks, Vani, for that. Rajesh, this next query is coming to us. It's not a stock-specific query. It's rather a sector-specific query that's coming in. And we have Shankar from Delhi asking for a short term, so a 6 to 12-month view on the pharma sector. How would you play the pharma sector? Would it be via pure play pharma companies? Would it be via diagnostics, healthcare, hospitals? What's your recommendation or a couple of picks if you could share with us from the pharma space?
See, we are very bullish on pharma space as such because one, it has underperformed the market rally which we have been witnessing from the last 12-18 months. Second, the valuations are very good. Third, the demand from US and Europe is going to go up in coming days. Coming to specific companies, I think one can have a look at Lupin or Ipca. As far as Lupin is concerned, they are doing very well. The second quarter numbers were phenomenal. I would say bottom line jumped by around 70-odd%. Good product pipeline. Generics is doing very well. They are doing into injectables. So everything goes in favor of Lupin. Again, Ipca is also doing well in the pharma side. And if you come to diagnostics, I think one can have a look at Metropolis Lab, which has been growing through acquisition. They have acquired number of smaller diagnostic centers, increasing their number of centers. And in the healthcare segment, we would recommend, of course, the first one would be Apollo Hospital. And one can even have a look at global healthcare. That's Medanta, I would say. That hospital is doing very well in the tier 2, tier 3 cities like Patna, Lucknow, and all those places where the number of beds per patient is very low. Average AROPB is going up by around 68,000. It was 68,000 in the last quarter. So I think these are some of the names which one should look at in pharma space.
And these are some of the names to keep an eye on within the pharma pack as well. But the next one that we have, Dhwani, is coming in from an investor who's not actually mentioned his name but wants to ask about a few counters: Sterlite Tech, Quantity is 5,300 rupees. Buy price is 218 rupees. What do you think about this one then? Dhwani?
Talking about Sterlite Tech over here, particularly, we've seen that in today's session and overall also the stock has been following a downward trend. And the support level for this one is around 110 levels. So in my suggestion, hold on to it. The worst is something that you've already seen. The working of the support over here will suggest a bounce coming in this counter, and the range formation we are seeing is on the higher side till 125. So given a stop loss at 110, you can expect a bounce of 125 in it.
I have to watch out for on Sterlite Tech on the upside. But on that note, viewers, time for a short breather on this edition of Buy Now, Sell Now. Remember, keep writing to us on the WhatsApp number that's flashing on top of your screen. We'll be addressing all your queries with both your experts. If it's a query about a stock that you already hold in your portfolio, do mention the quantity, the buy price, and the time horizon that you are seeking a recommendation for. But on that note, we'll slip into a short break. We'll be right back. Hi there, welcome back to Buy Now, Sell Now. Viewers, it's time to keep going with your stock-specific queries, and let's welcome back on board Dhwani as well as Rajesh, who have been with us since the start of the show for the fundamental as well as technical advice. Dhwani, coming to you now, we have our next query coming in from Umesh Bhatt from Pune. He holds 25,000 shares of Vodafone Idea purchased at 16.1, which means it's a significant loss coming in for him right now. He's asking if he should book loss and come out, or any scope of a recovery on the charts.
The price that he's bought at is absolutely very a high price that where he's entered into it. We can expect a bounce coming in also in this counter, but the bounce would not last more than 9 rupees on the higher side. So definitely there will be a loss that he would have to book into this counter. For now, I would suggest on short-term basis, 9 is where you can exit out of this position. On the lower side, stop loss that you need to maintain over here on is going to be of 7 rupees 20 paise.
Alright then, that's a take coming in. As far as Vodafone Idea is concerned, the next one that we actually have, Rajesh, is coming in from Venkat Rao, writing to us from Visakhapatnam, also a regular viewer of the show and a senior citizen, long-term investor as well, writing to us about a couple of counters. So Devyani International, 500 shares, buy price is 199 rupees, and IDFC First Bank as well, 3,800 shares at a buy price of 89 rupees. What do you make of both of these counters then?
Both have been doing well. The numbers have been pretty good. But as far as taking one by one, as far as IDFC First Bank is concerned, I think all the positives that has been there in the last 2-3 quarter numbers has been already been discounted. Asset quality has improved, bottom line has improved, margins have improved, but yes, everything has been discounted. So it will take much long period of time to see any meaningful upside in the stock, unless and until, of course, the numbers are further improved in the coming quarter. So I would say try to book profit if it jumps to around 70 odd rupees. And as far as Devyani is concerned, they are trying to store sales growth has been good. They're trying to open new stores. Margins have improved. From the kind of volume growth which we have seen into that, I think this company can do well in the coming quarters if this kind of performance is repeated. So at this point of time, it's a hold from our side.
Out on IDFC first, but hold on, Devyani. That's the call coming in from Rajesh. Dhwani, coming to you, we have our viewer Gaurav Mohindra, who's written to us from Indore, asking specifically for a tech check on BHEL. He holds 2,000 shares at 240 rupees, asking for a short-term view. What's your view over here?
Short-term basis, definitely the stock would see a certain bounce coming in on the lower side. Though the support level is at 222, 221 odd levels, but we can see a bounce that would be there into this counter till 250. Hold on to it. On the bounce, you can exit at around 250, which would make some money for you.
Alright, then that's a take coming in. As far as BHEL is concerned, Rajesh, the next one that we have is coming in from Nikhil Sharma, writing to us from Mumbai. He's an intraday trader, short-term and long-term trader as well. 20 shares of Axis Bank is what he's holding on to. Buy price is just about 1,157 rupees. What do you think about this one? Because currently he's sitting at a loss.
See, the loss is just because of market conditions. We have seen Nifty correcting by around 10%. So that is the reason we are seeing cut up on almost every stock, I would say. But as far as Axis Bank is concerned, the fundamentals have been very sound. September quarter numbers have been exceptionally well. And I think going forward, the bank is going to do well based on the fact that the asset quality is very good. They are increasing their branches and all. So it's a buy from our side. If you have liquid funds with you, you can even add to it. Otherwise, you can continue holding your existing position.
So buy or continue holding is the call coming in on Axis Bank. Very next query also coming in from a viewer who's Nikhil from Noida, holding 1,000 shares of Oil India at a buy price of 470 rupees per share. He's asking for the near-term view. He's also asking if he can start averaging at current prices. So what's your take on Oil India on the charts?
Okay, so averaging is something I would not suggest at the current levels. The stock is definitely facing a certain downward trend. Even if you take a look at the weeklies, is where we've already seen that a structure has formed on the lower side, where we are seeing a lower high and a lower low formation coming in. Though the support level for this counter is around 400 levels, so in my suggestion, hold on to it. If you're looking to average, 400 is a level where you should revisit the counter, and that is the point where one can average onto it for a longer term perspective.
All right, and that's a take coming in as far as Oil India there is concerned. But the next one that we actually have is coming in from Jay, who's writing to us from Mumbai, Rajesh, and he wants to know about Hindustan Copper because he is currently holding on to 2,000 shares at a buy price of 299 rupees. In fact, we have a few queries pouring in about this particular counter. So what do you make of this stock then?
Strong company, no doubt. Good reserves of copper. They're doing very well. Margins are improving. Demand world over is increasing. In the recent past, copper prices have fallen down in international market there, and secondly, the stock has run up quite a lot in a very short period of time, and that's the reason it's seeing some amount of correction or consolidation. But for a longer term investor, I think this is a good stock, and if it falls to around 220, 210 odd rupees, it's add at that levels. Current investors can continue to hold.
Dips and continue to hold on Hind Copper. Dhwani, coming to you, next query coming in from our viewer Padma Sivarao from Bangalore, and the stock that they're asking about is Jio Financials. They have 200 shares at a buy price of 320 rupees per share. He's asking how much more downside can we expect on this stock? When can he start averaging it? Because clearly he's facing a loss on that stock. What's your advice on this front?
So definitely, the stock has not done much in this particular year, but overall, looking at the perspective of a longer term, the stock is there, definitely going to give you some good amount of returns. On the lower side, the support level that you see is about at 295. These are the levels which we had seen earlier as swing highs, and from the same levels around, we have seen bounce also coming in this counter. Though there is a laggard moment that we are seeing in this one, I would suggest a hold on to this counter. Keep a stop loss on the lower side at 290. These are also the levels where one can add or average into it. On the higher side, you will see given 320 level is breaking on the higher side, you'll see 350 coming in.
And those are the levels to keep in mind when it comes to Jio Financial Services. But time for a very quick breather on the show. As we slip into a short break, do write to us on the number flashing on the top of your screen. See you on the other side, where we'll answer more of your stock-related queries. Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock-related queries. And the next one that we have, Rajesh, is coming in from Vinod, who's writing to us from Dubai. Wants to know if you have any picks from a couple of spaces. So the ones that he's looking at are specialty chemicals as well as cement. Do you have any stock counters that you wanted to mark out for us from these two packs then?
There are a number of choices, I would say. The kind of consolidation which is going on in the industry is giving an opportunity to investors for a longer term horizon. We hear every day some news, either Ultratech taking over some company or Ambuja Adani Group taking over some company. That's the kind of consolidation which was expected when Adani's entered cement, and now that's happening for real. As far as picks are concerned, I think with the kind of infrastructure growth going ahead, with the kind of real growth in the realty sector which we are witnessing, I think cement is going to do well. As far as picks is concerned, the first one would be Ultratech Cement. And if somebody thinks that Ultratech is a bit costly for them, one can go for Grasim also, because that's an holding company for Ultratech. Apart from which, it has other businesses too. So these two are on the larger side. On the mid-cap side, I would like to recommend Birla Corp, Dalmia Bharat. These are the two good companies which we have on our radar. Even a JK Lakshmi Cement is doing very well. So these are some of the picks in the cement pack. And as far as specialty chemicals is concerned, the entire pack has done very poorly the last 2-3 years. And I think it's time these companies should be we should keep on our radar because of the kind of fundamentals of the new product launches or the expansion they have been doing. The number one pick in this would be Deepak Nitrite, of course, and in the mid cap or a small cap space, that would be Lakshmi Organics.
Okay, so those are a couple of buy recommendations coming in from Rajesh. Dhwani, coming to you now, we have our next query coming in from our viewer Vinod, who's writing to us from Dubai and extending his season's greetings as well as New Year's greetings to both of you. And he's asking, okay, in fact, let's move on to the next query. Ramesh from Bangalore is writing to us, and he's holding 55 shares of Adani Wilmar. And this is a stock where we've heard some news flow coming in yesterday. The stock is significantly lower today, 6.5-7% lower. He's holding 55 shares. We don't have a buy price that he's mentioned, but he's asking for your suggestion on what to do next. Do you believe that this slight bit of a fall that we've seen today on the stock would be a good time to accumulate more, rather average your holding, or how is it looking like on the charts? A complete exit, would that be something that you would recommend?
Yeah, I would not suggest to hold on to this particular counter, given the chartical structure over here for this particular one has always been on the bearish side, and it's an exit in this one. No fresh entries are recommended over here. On the lower side also, given the fall sustains, we'll be seeing the fall continue till 280 odd levels. So from the current price as well, no fresh entries, as well as if you're holding a position, exit out of it.
So that's an exit suggestion coming in as far as Adani Wilmar is concerned. But the next one that we have, Rajesh, is coming in from Naresh, who's writing to us from Mumbai. Wants to know about ONGC, 600 shares, buy price is 300 rupees. Now he can hold on for 2 to 3 years, but what do you have in mind for this one then?
Looks good because of the kind of assets they have, not only in domestic market but internationally too. But the problem is crude trading at around $70 to $75 from a long period of time is bad news for companies like ONGC. And with the kind of price movement in crude as such, we have found that crude is still trading at almost all moving averages. So I don't find any reason to believe that crude is going to flare up in the near future unless until geopolitical tensions flare up. So for a longer term horizon, it's a good hold because it gives good dividend and all those things. But for a short term, I don't think anything would happen in a very short period of time. For long term, one can continue to buy and even hold.
Stock is looking good. Short term, not expecting much momentum. That's the call on ONGC from Rajesh. Dhwani, coming to you. We have our next query coming in from our viewer Balan. He's asking for a view on SBI for the next 6 to 12 months. He's asking if it would be a good time to add more of this stock right now, which implies that he is having some current holding in the stock. We don't know the quantity or the price, but he's just asking for a generic view if SBI looks good to add for the next 6 to 12 months.
Looking at a broader perspective, of course, the stock has been in a perennial bullish trend, and we've been seeing that an upside over here is sustainable. If you pull up a weekly chart as well, on weeklies, we'll always see that the 50-period EMA has worked as a good support level for this counter. And from those levels, we've always seen a bounce coming in this one. So the support level, according to the same, is at 780 levels. These are the levels that one can also look up at to average in this particular counter. The stop loss positionally that one needs to maintain on the lower side is going to be of 720, and on the higher side, given the up move sustains, we'll be seeing 900 plus coming soon in here.
All right, and that's the take coming in as far as SBI is concerned. Rajesh, tell you what, I'm going to come back to you, and this is a little bit of a catch-22 for you because Venu, who's a senior citizen, is writing to us from Chennai. He wants to start the year on a good note. And on that note, he does also want a suggestion from you for a stock that would fetch him 50% returns by the end of the next year. What do you have in mind for this one then?
See, that's a very difficult one. I think 50% expectation for a good fundamentally sound stock. This may happen sometime. I don't deny the fact, but you have to tone down your expectation. 15 to 18% or max 20% is a decent expectation from a fundamental stock. If it goes up more than that, it's just because of various other reasons. So tone down your expectation. And as far as long-term investments for 1 year is concerned, I think in the large cap space, one can have a look at Reliance, HDFC Bank, ITC, or Larsen. In the mid cap space, one can have a look at Blue Jet Healthcare, IRCTC, Coal India. These are even Lloyd Metals. These are some of the names which I can suggest you at this point of time. For a decent return in 1 year, I can't assure about 50%, but he has decent return in 1 year.
Decent return, and 50% might be asking for too much given the outlook that we have for 2025. So fair view coming in, Rajesh. Dhwani, coming to you for our next query, and the query is coming in from Mr. Siva Reddy from Andhra Pradesh. He's holding Reliance 760 shares at an average price of 1,362 rupees. He's been holding it for 1 year. He can afford to wait for another 1 year. So that's what his view is. He's asking if now would be a good time to average these shares further or wait for a further decline.
Reliance, off lately, the stock has not been doing well. We've also seen that it made a top formation somewhere mid of this year in July. And from there, we are seeing that the second half of the year has not been good for this counter. We have seen a constant downtick coming in. And given when the stock broke 1,390, 1,400 odd levels, from there, we've seen a decline coming in. But now is the time that one can average into this counter, because the stock on the weeklies is testing its 200 weekly EMA, and from there we'll be seeing a bounce coming in this one. So this is the right time to average into it. Stop loss on the lower side that one needs to maintain is going to be of 1,180, and on the higher side, this bounce will sustain on the short-term basis till 1,360 levels, and from there we'll see further buy action continue till 1,440.
And that's the take coming in as far as heavyweight Reliance is concerned. But the next one, Rajesh, that I have is coming in from Sonu, who's writing to us from Bengaluru. He's said that he's a big fan of yours and he does value your insights a lot. So he's asking you about GICRE, in fact, at 395, because that was his buy price. Should he stay invested at this point?
Thank you for your kind words and wish you a very happy new year, and to all other viewers too. As far as GICRE is concerned, it's a very good company, doing very well in the reinsurance business. It's one of the largest, I would say, in reinsurance. They do reinsurance not only in domestic market, but they have some international clients too. The book is very good. But at these levels, I think it has run up quite a lot in a very short span of time. So what I would suggest is book partial profit and wait for dips to re-enter in this stock. Don't sell the entire holding, book partial profit.
Partial profit and buy on dips, wait for a decline and then re-enter is the view coming in on GICRE. But on that note, time again for another small break on this edition of Buy Now Sell Now. Viewers keep writing to us. We'll keep taking your queries on the other side of this break.
टिप चाहिए, पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, चलेगा भी नहीं, कोई खा नहीं जाएगा और मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
Here's your boarding pass and your card. Good evening, sir.
Good evening.
Sachin!
It's a privilege to meet you, Mr. Mehta.
No, the privilege is mine.
No, the privilege is mine indeed.
No, it's my privilege.
It's my privilege.
No, the privilege is mine. The privilege is mine.
It's my privilege as
Actually,
well.
they both are privileged because they have the Master Stroke Savings account from Bank of Baroda, which gives them a host of exclusive privileges. Let's go have a cup of privilege.
Cup of coffee would be better.
Yes.
Hi there, welcome back. You're watching Buy Now, Sell Now on ET Now. Let's keep it going with all your viewer queries. And Dhwani, coming to you, we have our stock query coming in from Mr. Subrata Mukherjee from Kolkata, writing to us about Glaxo Pharma for an investment. What's your view on this? Time for a good buy right now? Does the stock look attractive on the charts?
There are other couple of pharma names that one can look up at. If you're looking up at the chart structure of Glaxo on the weeklies as well as on the dailies, the stock has hit a high point, and from there we are seeing a downward move coming in. The fall will here be there for a price level on the lower side that it would retest would be around 1970 odd levels. So that is the reason why, from a longer term perspective, Glaxo is not suggested. You can look up at other pharma stocks here.
Alright, so not a recommendation as far as Glaxo is concerned, but you can look at other stocks, and that's the take coming in from Dhwani as well. But the next one that we in fact have is coming in from Senthil Kumar, writing to us from Chennai, wants to know if you can buy Wipro at the current levels. Rajesh, what do you think?
The pack looks to do well in the near future, I suppose, because of the kind of rate cuts which we have witnessed in the US. But going forward with the commentary coming that there would be a slower rate cuts, the question mark has come upon that. But having said that, balance sheets are strong. They are having good cash position. Order inflows has been good, at least for the larger IT company name. Wipro has underperformed quite a lot when you compare to other large names. Valuations are very good. One can hold for long term. Even I would recommend buying in Infosys or HCL Tech, which have better prospect than Wipro. But yes, Wipro is also a good stock.
So that's the outlook coming in on a couple of those names. But moving on then, let's talk about the next query that's coming in. That's coming in from Kerala. Dhwani, our viewer Jaykrishnan is writing to us. He's asking, what would be a good level to make a fresh entry into ABB and Coforge for the medium term? Two stocks. What's your outlook on the charts?
Of course, ABB definitely one can look up at an entry point on the current levels as well. On the weeklies, we are seeing that the stock is hovering around its 50 period EMA, and from there we are seeing a bounce coming in. Price action is also suggested that on the lower side, 6270 to 6700 is the range where the stock has formed a base, and from those levels also we are seeing a buying action coming in. So ABB is a good buy at this levels. Given the horizon is of a near future, we are going to see a target of 8,000 on the higher side. For a positional bet over here, 9,000 is what I'll be looking up at. On the lower side, stop loss that one needs to maintain is going to be of 6,500 over here. And when we're talking about Coforge as well, we see the stock, of course, has seen an upward rise, one-way move coming in after the May month. And from there, we have seen the rise coming in of about from 5,000 to 10,000 levels. Further gains over here in this counter can be expected, but the entry level for this one must be taken up at dips. Any dip you're getting in this counter around 8,900 levels, that would be a good point to enter in Coforge.
All right, buy on dips. That's the recommendation coming in. As far as Coforge is concerned, Rajesh, the next query that we have is coming in from Tina, asking about a couple of counters. Now, ONGC, she's making a profit. Buy price was 77 rupees, and BPCL on the flip side, making a loss. Buy price was 350 rupees. Now, hasn't mentioned the number of shares purchased, but what do you make of these two counters then?
See, both are a hold from our side. As I said some time back, that ONGC, due to its assets and all with good dividend yield, is a buy for a long-term horizon. It's a hold for long-term horizon too. As far as BPCL is concerned, lower crude prices are a boon for oil marketing companies. They're doing very well. The new refineries have been doing well. They give good dividend. So I think at these level, one can even consider buying into BPCL or IOC. Somebody holding can continue to hold.
Continue to hold is the call coming in for a couple of these oil-related counters. But moving on then, Dhwani, next query coming in from a viewer, Prashant Reli. He's just asked a one-line query, very simple and to the point. Is now a good time to buy into Bata? What's Bata looking like on the charts?
Absolutely. Bata, definitely, we've seen that the stock, though has not performed very much over here in this particular year. When we are looking up at the yearly returns, we are, of course, seeing a certain downtick coming in about 16% is what the stock has lost in this year. But if you look up at the daily structures and the weekly structures over here, the base formation in this one can be seen around 1270 odd levels. And from there, we are seeing the support should work out fine for this counter. So yes, you can enter into this one given the horizon is of positional bet over here. Keep a stop loss on the lower side at 1270 and hold on the higher side for 1500.
That's a take coming in as far as Bata India is concerned. Rajesh, the next one that we have is coming in from Rakesh, writing to us from the capital, and he wants to know about 230 shares of Colgate that he's holding on to. Buy price was 3,498 rupees, and even BPCL that we've already talked about, even Hindustan Copper. But Colgate, what is your view? 230 shares, buy price 3,498.
See, the entire FMCG pack has been struggling for volume growth, which we have seen in the last quarter numbers. And I don't believe there are any reasons for the volumes to go up suddenly in the next 1 or 2 quarters. So there would be no movement, I would say. Rather, there would be some amount of consolidation or correction in the entire FMCG pack, barring 1 or 2 names. So Colgate-Palmolive, it's a good company for long-term horizon, but for the next 1 year or so, I think it would be consolidating at these levels. So it's better to switch from Colgate to maybe some other good FMCG names if you want to be in FMCG, be it a ITC or a Imami or a Marico, which are better placed when we compare to Colgate-Palmolive.
Okay, well, on that note, that was the last query we could accommodate on the show. But viewers, please keep writing to us and we'll be addressing the rest of the queries tomorrow and over the course of the week as well. Dhwani, Rajesh, thank you so much for joining us, extending the season's greetings to you and wishing you a very happy new year.
But with that, we're completely timed out on this year's last edition of Buy Now, Sell Now on ET Now.
If you like this video, then like, share and subscribe to ET Now.